In this video, I want to break down for you an Ethereum short trade. This is a 1 to 3.9 risk reward, meaning if you're wrong, you lose 1 unit, which is usually 1%. And if you're right, you make 3.9%, and it worked out absolutely perfectly. So let me break this down for you and the reasoning behind the trade and the logic behind the trade, so that hopefully this helps you become a more profitable trader and helps you understand more how these markets move. By the way, if you are looking for a place to trade crypto with futures and with leverage, personally, I like to use Bybit. The link is in the description down below. If you sign up through my link, you will get maximum deposit bonuses and be able to use that there. So if you haven't signed up for a Bybit account and you want to start trading, if you use my link, I would greatly appreciate it. So just to show you, this is this exact setup. You can see I shared this on the 23rd of June over here, and I was basically saying this is very low time frame. So I was looking on a 1 minute chart at that time. And you can see this was the setup over here. You can see this is the stop loss. This is the entry over here. And this is the target. And at this point, it hadn't yet hit the entry. This was the plan for the trade. So always with trades, what I try and do is try and plan the trade in advance, determine the stop loss, determine the take profit, and what it should always be. What I look for anyway is looking to risk 1% when I'm wrong. So if I'm wrong and it gets stopped out and it continues going higher, I lose 1%. But when I'm right in this specific case, I would make almost 4%, meaning that I can be wrong more than 50% of the time with these kind of setups and still be profitable. Now, as you can see, this is the exact same setup. If you want, you can go and compare the levels. It's all there that I just showed you ahead of time. Again, so this is not some random hindsight analysis where I'm breaking down a theoretical trade. No, this is something that I called in advance in real time, and then it played out in the exact way that I called it. And the only reason that I'm able to do that is because I understand more how these markets work, and the type of setup is a proven setup that happens over and over again. It's not going to work every single time. That is why it's all about probabilities. That is why I only risk 1%, because there is a chance that I get stopped out, right? And even if I get stopped out 2 out of 4 times, I'm still massively profitable, because when I'm wrong, I get stopped out twice, I lose 2%. But if I win this twice, I'm making almost 8%, right? That is how you can approach trading in a professional way to manage risk properly and basically really reduce the chance of you taking massive hits in any way, because you lose 1% when wrong on a single trade. By the way, if you want to join my VIP and you want to get my trade setups in real time, the link is also in the description down below. You can come sign up, join our Discord, and that is where I share these trade ideas and setups in real time. So let me break down for you the setup and the reasoning behind it. Okay, so first of all, here I'm on a 5 minute chart. When I was looking at this at the time, I was actually even looking at the 1 minute chart. Sometimes I like to do that. It's called day trading. We're looking for intraday trade setups at a very precise type of entry, because that just gives you the best risk reward, and you don't need huge amounts of volatility if you're trading on these lower time frames. Now, of course, it does take experience, and that is why I continue to educate and share and break these trades down. So what we had here, okay, we had this move in Ethereum to the upside. And what is important to see here when we zoom out a little bit, because this is part of the reason why the trade was taken, right? It's part of the logic behind it. You can see this line over here, that was this high. So what these markets like to do, what the price action likes to do, is it likes to take out previous highs and lows. And the reason for that is it's liquidity. There's a lot of stops and orders just at these highs. People who are shorting, they put a lot of stops here at the high. So by the price wicking slightly above that, you know, it goes and takes out certain stops, it liquidates certain people, and then the objective is achieved. So it doesn't necessarily need to continue higher. So what we see is we see the price action go above this previous high, and that's why it's so important. After it pulled back, that's interesting, because obviously it can keep going, right? But if it were to keep going, it would obviously have full body closes above this and continue higher. Now, the fact that we just saw this little wick up here and then a pullback to below it, you can see there's no full body candle close. That is the first indication for a potential short setup. Then the second indication that I'm looking at over here is we had this drop. So I'm not just randomly shorting it first. First we get the drop. We have the indication here, it wicked above there, and potentially that is just a stop hunt, pull back down, no body close above there. Then it pulls down. Then what we have here is we have this break, and you can actually see it even better on the 1 minute chart, but for now I'll leave it here on 5 minutes. You can see the price went below this wick. Now usually in an uptrend, we are constantly making higher lows. You can see over here, higher lows, higher lows. And then when it dropped, it went below this low, it made a lower low, meaning there's a potential chance for trend reversal. Okay, so after that, what we're looking for is a pullback up to the Fibonacci golden pocket of this move, and then enter a short with a stop just above the high or at the high. And then what are we targeting? We're targeting the next move for potential liquidity, which is basically these lows, and you can place the take profit just a little bit before it in case it just doesn't hit it, and that is a likely target. Okay, so that is exactly the setup that we have over here. Let me zoom out a little bit. And let me make this a bit wider. So you can see that is exactly what happened. We got the drop here, got the liquidity grab, we dropped, got the market structure break, pull back to perfectly the Fibonacci golden pocket, which is why I can set that entry so precisely. You can see that is literally within like $1 of the entry, and then an immediate drop, and continue to grind down. The ultimate target here was this low, a little bit higher. But you can see what happens sometimes is that we got this, right? It almost went to the take profit, and then it ran all the way back up to break even, and actually a little bit into the stop zone. But the stop loss held, and that is the key with these types of setups. If you know it's a proven setup, the stop loss is set in such a way that if it gets hit, the idea was completely wrong. But if the setup is correct, the stop loss won't get hit. And even if it comes all the way back up like this into the stop loss zone, it's still within the trade. And eventually that is exactly what happened. It went up here, came back all the way down, and eventually it took out, as per the idea, it took out these lows. As you can see, it dropped below it, and then the trade is completed. So this was a 1 to 3.9 risk reward setup, and it ended up being 3.9% gain, or 3.9 R. And of course you could manage the trade here also once it's in profit. If you wanted to, you could have taken partial profit, or even if you saw here potentially that it was looking like it was going to potentially run up, you know, you could have taken profits here or closed and maybe even re-entered. But even if you would have just entered at the original idea at this point and held it, the stop is here, the take profit is here, it would have played out perfectly. And like I've shown you, there's a real logic behind this trade. It's not just some random idea. I'm not blindly like shorting the market or gambling on where I'm going to enter. It is very precisely planned ahead of time, based on logic, based on reasoning. It took out the high over here, so that was objective met. We had market structure break and a retest to the Fibonacci golden pocket, and then the trade was entered, and it played out exactly in this way. So hopefully you found this educational. Obviously there's a lot more behind this and a lot more of the concepts. You know, if you're new and you're watching this, you don't really understand. I tried to run you through it here briefly and in detail, but of course the concepts like market structure break, the liquidity, the Fibonacci golden pocket, the targets, all that kind of stuff, I explain that all in my trading course. There's over 50 lessons as part of my VIP membership, and I shared the setup in real time in my VIP Discord, and I continue to do that basically on an ongoing basis. Trade ideas, market insights, offer my support and guidance. So if you want to join, the link is in the description down below. It's risk-free. There's a 60-day money-back guarantee. So come and learn from me, and you can take advantage. You can get these setups. You can learn how it works and learn how I view the markets. And if you don't yet have a Bybit account and you want to start trading on Bybit, use the link in the description down below. You get maximum deposit bonuses and all sorts of other benefits if you use my link down there. And just always remember, the most important thing about trading with leverage and trading futures is that when wrong, you have to manage your risk. So what I like to do and what I always say is, when wrong, you just risk 1% on a trade. So if you have a $10,000 trading account, you risk $100 when you're wrong. Okay, that way you can lose many trades in a row and still have plenty of capital left to continue to make it back. But where most people go wrong, where most retail traders go wrong, is they risk way too much when they're wrong. They lose 10, 20, 50% of their account on a single trade, and then they blow their account. So always the most important number one thing is just manage your risk when wrong. And then afterwards it becomes a journey, a process of just studying, practicing, putting in the time to journal your trade setups, the reasoning behind the trades, and then reflecting on that data. And just like any sport or any skill, the more you practice, the better you get. And of course, it helps if you have a good mentor and ongoing guidance, which is what I offer inside my VIP. So thanks for watching. Smash the like button. Join VIP if you haven't done so yet. And I will see you in the next video.